Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be talking about the monthly and quarterly close for Bitcoin. There's a lot of things to think about, lots of different angles to take a look at with this one, so do bear with me as we go through several charts and take a look at Bitcoin paired up with USDT on the monthly chart. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. It's the first place that we go to notify you of everything that is going on in the crypto space, so why not check it out, linked in the description down below. Let's jump right down on into this one, right? So what we'll do is we want to kind of reflect on where the monthly position is. But I think before we talk about the monthly charts, what we want to do is we just want to recap where our weekly is, because the weekly essentially is building up into a monthly position, right? And it's important that we reflect on not only the monthly close, which is going to be happening on a Friday, and the quarterly close, which is also happen on a Friday. The weekly doesn't really have that. It kind of allows you for consistency, where you can actually take a look at the weekends always being on the weekend, and every single candle will include at least one weekend, right? Whereas your monthly close will have different numbers of Saturdays and Sundays, and the same with your quarterly. Therefore, they sometimes can skew your data and kind of lead you down the wrong path, which is one of the reasons that I don't look at things like 3-day charts or 5-day charts, because every candle is going to start getting skewed, with some having weekend data, some not having weekend data. Okay, so it's important that we kind of reflect on things that have a consistent approach, and allows for consistency within your analysis. Otherwise, you get kind of skewed and potentially go down the wrong path, as I said. So on the weekly time frame, what do we see, right? We can see that we had a very bullish market, right? And during this bullish market, as I kind of marked out here, we have the lower lows and the lower highs that break upwards. And then we have the bearish market, where the higher highs and the higher lows that break downwards, right? And so this is pretty easy to kind of spot. You can kind of see it all when you draw it on like this. It's quite obvious, in fact, when you start drawing them on here. And you get different scales of this, right? You can see this one here, very, very bullish, right? So as we start to end this bear market, we have the lower lows and the lower highs. And what eventually you see is this big break to the upside, right? This is where we currently sit. And I wanted to just kind of reflect on this at the moment, because we haven't really got at the same kind of level of what you saw previously on this weekly chart, right? So what we do have actually is the opposite. We can see here, we grab another channel, depending on where you want to start this. Let's hypothetically say that we've started a channel over here, and we pull this down, for example, and I just pull it across here. What we're actually looking at here is higher highs and higher lows. We haven't had the lows yet, but you can kind of see here that we're not doing what we would expect to see, which would have been this sliding motion to the downside, so that we can break upwards. And this, all of this, in fact, could be a much bigger scale than we maybe even want to see. And that is that we do something to this effect, and we're waiting for a bit more of a test to the downside before we actually have that break upwards, right? So I wanted to just kind of reflect on that just before we get into the monthly timeframes, because this actually gives us a much more consistent approach to the market when we start to actually take a look at how every candle here is forming for us and what that might mean. Ultimately, we have broken up a little bit higher than expected, and as I said previously, my biggest worry is that we're doing here is a big corrective action just to slide us back down again in a much bigger way. So I want to be a little bit cautious with that. But what we're going to do is we're going to go and jump down into smart money concepts on the monthly time frame, and then we're going to go ahead and take a look at the key areas in terms of support resistance on the monthly time frame. So let's go ahead and jump into here, right? So what do we see on this this chart? Well, there's not a huge amount of data because we're using Binance charts, at least for this one. Let me see. Maybe I can flip this over into here and see if this makes anything better. Yeah, we get a little bit, I guess. A little bit more data, so that's not too bad. Okay, so the first thing that we can see here, if I zoom out far enough, right, on this monthly time frame is our white line. Okay, our white line is our EMA. And this is a 50 EMA, but you don't have enough data here for a 200 EMA. So it's only a 50 EMA. We can also see that we've been pretty much consistently riding above this thing. Okay, we had a few months down here in this bear market so far where we're below it, and where we are right now on this particular candle is we might have the ability here to actually close above it. Okay, and that might be seen as bullish on our monthly time frame. Okay, so we do want to kind of reflect on that. Okay, so that EMA is at $24,479 USD, not USDT, not USDC, USD. Okay, and it's important that we make that distinction because USD does have different values than your stablecoin variants. So knowing that, we can see here that this could be deemed as a bullish movement with Bitcoin closing above a 50 EMA, but it's not the 200, and it's because we don't have a 200 EMA to actually allow us to understand what that might look like and whether or not we are below that 200 EMA. And the reason that we talk about the 200 EMA is that 200 EMA is usually your trend filter line. This is the one that basically you go to say, if you're below it, you're bearish. If you're above it, you're bullish, right? So when you close above a 200 EMA, it's really, really bullish. And if you close below it, it would be a really bearish situation. A 50 EMA doesn't really carry the same weight, but it's there and it's something that we have been kind of riding a bit. So we'll reflect on it. It could be seen as a bullish movement. However, with smart money concepts, we should also equally consider the fact that we are below our equilibrium on our monthly time frame. It's possible that we do visit this equilibrium and find it as our resistance line. Okay, and it is important that we kind of reflect on the fact that smart money concepts loves to retrace towards our equilibrium, and it is a key area, right? We can also see that we have a week high, but we also have a week low, and it's all the way down here. Not that I can show you guys, but it's down here, week low, right? Way down there. We haven't really got enough data to make those things really meaningful, in my opinion. So be interesting to kind of see how that goes. The big takeaway here is that smart money concepts had a break of structure in this bear market. It is a minor, okay, so it's something you might see a little bit more of during the next few months. It's not like a major solid line change of characteristic that shows us bearish on a weekly time frame. If I zoom out far enough, you can see that it isn't really anything that constitutes a major directional trend on this smart money concepts on the monthly time frame. There's just not enough data for that, right? So we want to reflect on the fact that we have a minor change here, which is interesting for us, and it's important that we kind of reflect on that, but it's nothing here that's going to be at a major level. Okay, so with a change of character that was bearish here, and this move to the upside, this is not unusual. Normally what you find is these bear market rallies like this one, or a kind of a pullback usually occurs when you have these change of characters, right? You shift down, people believe that the bottom is in, it reliefs up a little bit, and then it continues in that direction. So what we're looking for here is a break downwards. Now, the problem with you have here is that our change of character here, if we wanted to see a break of structure, means new lower lows. So bear that in mind, right? This is not overly the most positive thing to be looking at in the world. So to kind of balance out the pros with the cons here, because it's important that we reflect on it all, right? We can't just look at the good, we have to look at the bad as well. And the bad is that smart money concepts is telling us that we do have a bearish situation at the moment on the monthly time frame. Okay, even if we do close above that 50 EMA, that hasn't changed our structure. Our structure is bearish until proven otherwise. And a closing position above this level would actually be more beneficial. So we'd have to look for a close above 28,600 if we were to try and change that. I think that might even have to be a little bit higher. We'd have to see how that kind of price action reacts at that level, because it might be that we actually have to close up here at 31,967. So we'll see how that goes. I would have thought that we would get a change of characterization at 28,600 if we close above that level. So we'll keep a close eye on that one. So from a smart money concepts point of view, it doesn't look overly positive. We're below equilibrium. We have a bearish change of characterization, and everything else here is very minor. There's nothing really to note at this point on this monthly time frame. So for now, this looks like we should be starting to think about movements to the downside. Now, let's jump over into this one. This is actually probably the one that's the most important, I think, outside of smart money concepts. Smart money concepts on the monthly time frame doesn't have a lot of information, but here what we do have is some interesting key levels that price is reacting to. So let's jump into this, right? So we'll start with our yellow box. Okay, this yellow box area here is really interesting to me. The reason is that up here we find this as an area where buyers are. We call this often a demand zone, right? So up here, this was your demand zone. So if I were to have adjusted this and I would have drawn it out like this, we'd have been looking at this as a bullish state of play, right? In fact, I do believe, if I remember correctly, we were talking about this low area here and saying we had a swing trade opportunity. But nonetheless, a lot of people were worried that this was the bear market from the 65k down to this low, and then we rallied up into 69, right? We saw this move coming, but nonetheless, we see this here as a demand area. We can see that with these 3 wicks particularly, and we can also see it's getting retested here. And it wasn't really until we lost this area that we start to realize that all of the demand within that range just up here got chewed through, and we broke down below it, right? And what are we doing right now is we're coming back up to test this area. So let's just pose a hypothetical, right? And the reason that we talk about demand areas and supply areas is one of the psychological effects that you have. Let's hypothetically say that you were buying Bitcoin right up in here, right? Right here at like $32,000, right? And you thought you were going to the moon, and instead Bitcoin's price slides down here. You don't panic sell. You've been holding this entire time, right? For months and months and months and months and months. And right now, price is pushing right back up to where you bought it. Are you going to hold it, or are you going to sell it, right? You've seen your investment dwindle down into nothing. You survived this entire holding position. Are you going to worry that actually it's just going to slide down even further? And are you going to start selling? That's often why you find that the demand areas turn into the supply areas. Basically, people who were trapped in positions can now get out of those positions. So it's hypothetical. It's not like a guaranteed science behind it, but you tend to find is that what was previously demand turns into supply. This is also very consistent with when people talk about support lines turning into resistance lines. It's effectively the same thing. People are able to kind of switch and change their positions around, usually at cost neutral or at a minor loss. So what you see here is a pretty big one, but it's because we're on the monthly time frame, right? We're talking about 28,600 to 37,597, right? It's a pretty broad range, and we can see that this is the most typical area that we're going to find some form of rejection on. So for example, let's go ahead and take a look at some history here. If I were to draw a yellow box area right in here, okay, we see the very similar situation occurring. We see people that may have bought up here, lose all of this movement, retest this area, and then it gets pulled back down again. And this usually happens just because people were trapped in positions and they can now get out at cost neutral, right? They can get out of those positions. So what we're doing here is we're seeing very similar things. We're looking at a previous demand area that's now potentially turning into a resistance. So are we going to close inside that area, or are we going to effectively not close in that area and just get rejected from this area and move down, right? And so these are key things, very, very important. Now, the other things that we have to reflect on is, where else are we finding levels of support? Well, we're finding levels on support on the 2017 all-time high. We lost this, but we didn't close above it until we closed below it until we got to here, which was September 2022. Then we closed above, then we closed down again. Okay, now we closed above it, but we also have retested $19,666 as a support line. Okay, so what was previously supply has now turned into demand, because it does go both ways. So you can see that we're actually just sandwiched between these two key areas at the moment. One of these is weaker than the other, and I believe that the weaker one is going to be this one down at the bottom. So we will be looking, in my opinion, for a retracement, and we are looking for this to come on down, but we'll see how that kind of plays out. We can see below this is my most interesting area that I do think we have to visit, which is $13,880. And this is an interesting area. This is where we rallied up to in June of 2019, and we haven't tested it again, right? We've pushed through it. It was a previous area of resistance. We pushed through it. We haven't come back down and retested it. So my expectations are that we do come down here and we do test this area, and we do try to fill this area out. Okay, and again, it is reasonably broad if we were to think about where price was kind of getting rejected as well. Okay, so we're talking really 10,000 up to about 13,888. And then the most extreme, $6,500 right the way down here as another area of support. This has been tested. Okay, so people got trapped out here. They pushed up. We tested back down here. We turned it into support levels, and then we moved up. Obviously, the pandemic crash brought us down a little bit lower, but you can kind of see it in there. So from our monthly standpoint, what am I looking for here? Well, I'm looking to see whether or not we can close above 28,600. If we do, then yeah, I think there's ground to be bullish for a short period of time. But essentially, my eyes and my views are that we will get rejected from this 28 to to $37,000 range. This was previously demand. I believe it will turn into supply, and I think we will be moving down from here. We can see that the stochastic RSI down at the bottom is going to be in an interesting position. When we get this close, how high are we going to be to this overbought area? Are we going to go right up into overbought? Are we just going to move gradually towards this overbought area? And are we looking for major retracements? We're overbought on the weekly time frame, so it is a ticking time bomb as to whether or not we're just going to pull back down. We are not oversold, so we can come back down into oversold. It's not a problem. We don't have to go to overbought either. So interesting times are here for BTC on these larger timeframes. Let me know what your thoughts are on the monthly position. Do you think that we are going to be closing inside that $28,000 to $37,000 range? Do you think we are bearish at this time frame, or do you think this is actually a very bullish time for Bitcoin on the monthly? Let me know your thoughts in the comments below. If you found this useful and informative, smash that like button. Really do appreciate that. If you're new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Don't forget to join us in Discord, guys. I'll catch you all in the next one.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.